Yo, 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 what's good, guys? Apologies. Starting a little bit later today. Was gonna do an earlier stream, but I got held up with some work. So it ended up being 10:30 anyways, but yeah, here we are. Last stream of this week, because it is a Thursday, and Friday after kind of market closes, there's not really much to look forward to, besides the weekend, obviously. But yeah, this will be the last stream of February, as tomorrow is indeed March. We'll get to the analysis very soon. And yeah, hope everybody had a good trading day. Hope everybody's doing well. We'll get to the charts very shortly. Yeah. I don't think I was actually on the charts too much today. Looks like we just had a push for news, right? Yeah. Massive push for news. Now we're consolidating a little bit. Price hasn't really done much, I would say. Your daily kind of looks pretty clean though. Yeah, we'll get into all of this. But yeah, looking pretty interesting, guys. As usual. This will also be the last opportunity to ask any questions. I did have an earlier session one-to-one with one of DVS members, or EvolutionDVS members. So just to go over some of the concepts, I think it was pretty useful. Just kind of understanding what liquidity is and how it kind of incorporates into all of the kind of setups and that we look for, like breakouts, fake outs, onions. How does liquidity play into that? And when do we look for liquidity? When do we look for breakouts and all that? It was a pretty good session. Chat is not moving today. Is anybody even here? Bruh. I have Ori who just said yo yo yo, and that's about it. Oh, we have a GW. Hello. Sup? Alright, here we go. Chat's moving a little bit more. Yeah, I know you're here, Ori. Of course you're here. You're here every single day. It's a good thing. I mean, hopefully these breakdowns are helping you in your trading, Ori. Because you've been here relatively consistently, so yeah. It's good to. I mean, it would be good to see, what the difference in your trading has been after joining these streams. Yeah, I think that's the key thing, right? If you're able to build consistency across multiple elements in your trading, it's just a good practice, because that's ultimately what's going to lead to your consistent profitability, right? SFX, hello, hello. First profitable month, man, congrats, that's huge. And buys with DonVo and some drawdown at the moment, what are your thoughts? Yeah, we'll get to that. I think I exited earlier just because I mean, I saw an opportunity to exit. So, so yeah. But yeah, we'll discuss that. I think the trade idea isn't bad. Like, it does make sense. It's just how candles potentially closed off was something we need to look out for. But yeah, already, that's huge. The fact that you had a profitable month is massive. Hope everybody else's trading month has been relatively good. I think with Don we took some losses, right? But it's not about making up the loss or whatever, right? It's about developing the skill over time. Robbie, you're in buys with Don, you can't afford a pineapple. I mean, it shows that you probably over risked, right? Because if your overall kind of understanding is that, I don't know where the stop loss is essentially for the trade, but it's definitely below some lows, right? And if you can't afford a pineapple, then we're not really even in that far in drawdown. Like, yeah, sure, we're in some drawdown, but what is it, like somewhere around here? So we're only 30 pips in drawdown. So if you can't afford a pineapple, I mean, yeah, I mean, there's a high chance that it will continue to come down first, and I'm probably expecting it to come down first. How you manage that trade is definitely up to you, right? But I would say there's potentially some more that you over risk there. And you have to ask yourself, like, why? Why did you over risk? Why don't you have space for a pineapple if we know that there's a high chance that we potentially would use pineapples to get out of positions, right? But yeah, cool guys. We've hit 10 people. I'm probably gonna get started. And yeah, no worries, Robbie. Ooh, I am lagging a bit, and my mouse is jumping around. But cool. Let's start with the monthly analysis because we are actually closing today. So it's going to be very interesting, interesting monthly closure, I would say, which is, you know, yeah, we'll kind of break it down a little bit more, but essentially, yeah, because February only has, well, this year's a leap year, right? So we have 29 days this year, but the whole February candle will be closing when the market kind of reopens later on, will kind of brings in a little bit more volume for pre-Asian. And I would say we're still in the range. There's ultimately, we haven't broken out of the range, and there's a high chance that we will continue to be in this range for the next, large part of the month. I would say for March, because right, we've seen a tap of a review February, right? So in February we opened at around this area, which is around 2037. We've come down, broken the lows, tapped into the bottom of our range, which is around 1993, 1991 sorts of areas, and now we've flipped bullish for the monthly. But we flipped very last minute, right? I think today was like the actual flip of the candle. So the final day of the month we flipped. So does that do anything for us, right? You have to evaluate that. Like, we understand that when you flip, there's a high chance you're gonna kind of come back up and drive up to the top of the range, but you also tap in the top of the range at the very beginning of the month, right? At the very beginning of February, we came up first before starting driving down. So now that we have this potential bullish closure for the month, there's a high chance that we're gonna get some positions, that we can get some positions from 2044 up to the next top of the range, which is 2076. But is that enough for us to continue breaking above and starting to kind of push up? Right. So going back to kind of the zoom annotations here, is it enough for price in this case to do something that looks like this? Right? Do we now have liquidity for that? And just off the bat, I would say we probably don't, right? To indicate that, right, what are the things that make me say that? I would say number one is because we tapped into the bottom of the range, right? But I wouldn't say this is very much liquidity. Yes, we broke the lows, but this is just the bottom of your range. So at any given point, if this is just the bottom of your range, what you could be doing is continue to range like this, and then a break of the lows, a fake out of sorts, and then that retest of the highs. So if that happens for next month, fantastic, right? And if that happens in the way which, you know, price potentially has no no top wick at the moment, or as it opens up, breaks the lows, then we have some pretty nice range to fill, right? I'd say from between 2044 here up to 2076, which is 320 pip range. So there's definitely range to be played, right? The only issue is, will it actually break the lows? And if it doesn't break the lows, what are the potential positions we can take? For February though, because it is a bullish closure, it's indicating that it has potentially found some level of support around here, right? And if that is a level of support that we have to kind of take into mind, right? It is above most recent support, and it is at all-time highs, sort of monthly all-time highs support, right? So if that is, you know, a support that's being formed, that's completely fine, right? What we'll see is potentially some bottom wick before going up anyways. If it breaks the low, cool. We understood just now, right? We're going to have very clean range from 2044 to 2076. But if it doesn't, we still have range to go up from 2044 up to 2076, right? So, what was that? Please do also talk about swing trading at the same time with the same, yeah, swing trading wise, yeah. So if you do break the lows, right, and then you have no top wick for the monthly, there could be some potential swing trades, because you're understanding that whatever you do, there's a very high chance that because price is still in this range, you will be able to come up to tap the top of the range before driving down, because you haven't really created a top wick as well for these two candles for you to come down, right? So if you are expecting price to come down, you're probably expecting something that looks like this, right? Because you need to break these highs, grab the liquidity before coming down. So if that's the case, and you've come down first for the month, right? So if your next monthly candle kind of looks like this, right? So well, it would be bearish at that point, right? So let's just draw this out. So let's say it's like this, with no top wick, and it looks like this. Then you're in a position where you could potentially hold some swings until the monthly flip, right? And this could be some potential positions, but you would need to break the low. That's what I would say, because you are bullish. Overall structure for monthly is also bullish, right? We've broken above most recent. We're holding our ground here. So any given point you can continue to push up. It's just that entry will need break the low, and depending on how far it breaks the low, right? It could be a flip of the monthly. It could be a wick entry, right? So that's what we're going to be looking for in terms of the monthly key things, right? We've closed bullish, so we're definitely looking to fill the range up to 2076, because that's the kind of cycle of the market that we're currently in. Next thing is, I do still need liquidity for either direction, because you've kind of slowed down. You haven't had that major push that we're expecting, so things can swing either ways, right? But we need liquidity for both sorts of pushes. So weekly, we're gonna have a weekly closure after tomorrow, right? So today is Thursday, but understanding that if we put our ranges around here, 2017, right? So that's kind of our level, our most recent level. We had a breakout 2 weeks ago, right? To come down, and we filled the bottom of the range with this candle, right? The bottom of the range of the monthly, right? The monthly range. We then closed back into the range, and now we created a bottom wick for this week, and now we're pushing up. So we understood that as it was creating that bottom wick, there was a high chance that it was going to flip, because you had your previous weekly was bullish, right? So after you flipped, you came up, you tested the top of the range, right? So this is the top of the range, because look here, right? You have some candles closures, you have some support, some resistance, some candle structure there, right? So this is essentially close to the top of your range. So if you've tapped the top of your range now, means that high chance you're just in this range. So this is your weekly range. If we understood that previously, this was a monthly range from here to around here, right? Then this within here is our weekly range. So if in the monthly range, we've come down, we've tapped the support, right? And now we're rejecting the come up. And on the weekly range, we're still within this range, right? So what we can expect if price really wants to go up is probably a break of the weekly range for liquidity and then a continuation to go up, right? And what would that align to in terms of your monthly candle as well, right? You'd probably have some range on like a smaller time frame like the weekly compared to your monthly, come down for a steeper bottom wick for your monthly, and as you then retest those highs, cool, you can look to take those positions above 2049, 2044, right? Above here up to 2076. So those are, things are kind of starting to align now, right? So you're starting to see how the monthly and the weekly kind of coexist. And that's just the same with every single time frame. But the key point is for the weekly, we're also bullish, but we're going to need to see how this weekly closes. If the weekly closes again respecting 2044, there's not too much we can do besides, again, wait for some more liquidity to be formed before we're able to kind of push up and past here to continue going up, right? And looking left, right? Looking left as in, what was the last time we were able to break above 2049, right? So looking at, there's only two cases really. So this case here, right? And also this case. Obviously, just based off of the weekly, it's difficult to tell because, right, this one you had no bottom wick. This one you also kind of just push straight through. So we'll see this on the smaller time frame, right? But 2049 on the weekly level is definitely a key level that we're looking to drive past potentially, but with liquidity. So yeah, if the kind of weekly closes as it is now, what you could potentially expect are some sells because you have closed respecting this range, but I'd need to see a top wick regardless, right? So if price does something like this, breaks all the highs, then comes down, that would be ideal. Ideally, it even taps into 2076, right? Or somewhere similar to this level for liquidity before being able to drive down. So that's what I'm expecting. Let's drop down to the daily. Daily is also, I think we're closing respecting a range here, right? So around 2046. So kind of similar to our weekly level, right? We've closed, we're going to close on the weekly, potentially respecting that level, right? And what does that mean? It just means that there's a slight need for more liquidity before we're able to drive up. The good thing is, right, we do have kind of from previous price action here, we did, create a support here. And what does that mean, right? What does that mean for price? It means that, we're in a potential situation to be mirroring this traffic here. To be mirroring the same traffic going up. And as you break past these areas, you could see some pretty clean drives once again up to around that 2040 or 2070 areas there. So why am I saying this, right? Because this is the last time you grab liquidity potentially outside of this daily range, right? You grab liquidity here as well for this, right? For this push up to here. You did this. Oh, that is not what I was looking for. You grab this and you pushed up there as well. So you have range to fill, right? You have range to push. The only issue is your daily currently, right, will be probably respecting this top of the range. Doesn't mean it can't push, right? If you look at your case number one, you pushed with no top wick, no bottom wick, straight up. All right, so that could happen as well. But in the case that, this happens, we probably won't be able to get any trades. But with the way that price is currently closing, we do have a top wick, so we could see a wick fill. But that also would involve the daily creating a steeper bottom wick for us to start retesting those highs. And also, if you then put into context what the weekly will look like, if the price just kind of starts driving, or you get a bottom wick for the daily, then a closure after, like similar to like around this kind of 2050 areas, right? On your next daily, what that weekly candle will look like is a no top wick weekly candle, right? And in that case, you're probably worried if price has enough liquidity for you to continue driving up because you have no top wick. High chance you could just get a rejection for price to start coming down. But if you're just purely looking at the daily, I would say you have a range between here and here. So this is the range I'm currently in, right? And if this is the range I'm in, cool. I'm understanding that you haven't broken out of the range. You have closed respecting overall, right? So any given point, you could start coming back down. But if you are coming back down, I'm probably expecting a steeper top wick, right? Look at this time. Here you broke the highs here at 2051. In this case, you drove straight through. Here you broke the highs all the way up at 2064, but you were bearish to come down, right? In this case, you did drive up as well here, right? But you tapped into around that kind of 2060 something areas. In this case as well, you also tapped into these areas above. So there's a high chance that price will need to, come up towards the top of the range, break the highs before you're able to come down and like truly come down. And when I mean come down, right, it's all the way down back to around 2030 sorts of areas. So if price really wants to come all the way back down, you'll probably need to see a break the highs before coming down. On top of that, your daily candle has also closed bullish, which means that there's a high chance that price will do something like this to come up. And then if it does want to reject, you could see some sort of weak bearish candle for tomorrow, right? Something that looks like this after potentially breaking the highs. And in that case, you're definitely out already, right? You're looking for that push to go up potentially with Don's current trade. But the issue is, right, is this guaranteed? Less, because you've now closed respecting any given point, right? Price can just start driving down and do something like this, right? That could happen as well. So don't just blindly look at, oh yeah, cool, we closed bullish on the daily, we're currently bullish for most time frames, so yes, it's definitely going off, right? You have to look at the small details as well, like for example where you've closed respecting, where that liquidity potentially is for you to drive down, or if you want to continue driving up, where we're looking for liquidity, right? And in both cases here, this and this, right, we're looking at some areas down here being tapped, right? So if you closed respecting here, you came all the way back down to around 2031 before being able to drive up. So what I'm interested now in is potentially this candle, right? Understanding why did that push, where did it push from, and what areas it tapped into. So I've put a box there, right? We'll have a look at exactly what that area is in a second, which is this. That'll be interesting. But yeah, 4 hour, I'm gonna just quickly mark up my 4 hour ranges, and it's gonna be here. And then my 4 hour bottom of the range is 2031. Looks pretty nice. Yeah, 2031. So again, right? So we mentioned just now that our daily range is kind of around 2048 here, all the way down to, I think it was around this 2019 or 2029, 2030 sorts of area, right? So this was our daily range. 4 hour range is very different because you also have another level towards here. 2039, I would say. Let me just check that real quick. I mean, I'm liking 2039, but 2038 is also not bad. Yeah, 2038 is probably my level. So within this kind of range, which is your daily range from here to here, you have smaller ranges, right? At the moment, your 4 hour probably exists within this range. So I wouldn't be surprised if you came all the way back down, right, to tap into your, most recent support, which is around 2038, before you're able to push. And I would say one key thing as well is you've closed respecting. And on the 4 hour, you've got to break the highs, and now you're looking to come down, right? So what am I looking at? All right, so I think I broke this down for one of the members most recently, but kind of what I'm looking at is previously a mirror that looks like this. All right, so understanding that here we were struggling to break past 2038, right? And after you broke past, right, you grab liquidity here before making your way up to 2048. So this area is a key place that we needed to tap, right, before tapping into 2048, which is exactly kind of on the dot where you tapped into for price liquidity. Then your next move was to go up to here. You weren't able to push past, so kind of in a similar situation to this, even though you rejected very heavily in this case, right? So slight differences there, but in this case, you came all the way back down and you started to retest in 2017 before you're able to make your push up. So I think overall, like what you're expecting is probably priced to make its way down towards the bottom of the range, which in this case is 2038. But you may see a re-break of the highs before doing that. Because if price really wanted to start driving down now, it would have, right? This 4 hour candle would have just started driving down instead of kind of hovering and then slowly trickling down. So it definitely shows that you need some liquidity. And that could be our exit point, potentially, for the current trade that some of you guys are in. But other cases as well, if price really wanted to come down, looking at all of this, right? Here, you really want to drive down, you could also tap into kind of 2036 areas, and then you got to re-break the highs before you're able to come down. So I would say be more patient with the trade. you understand that your overall structure as well is very bullish. You have close respecting, right? So at any given point, it can come down because you're at the top of your range, come down to the bottom of the range like this, right? Bottom of your range, grab some more liquidity before you're able to go back up. But because the bullish structure is on your side, the daily bullish candle is on your side, the weekly bullish candle is also on your side, and overall structure, right, is definitely on your side. It's just where's that bottom wick. And I think our stops are probably in a good place. I don't know where the stops are exactly, but you know, if it starts re-breaking some of these lows here, right, at around 2030, then yeah, I'd be a little bit more worried, right? Because then at that point, structure is breaking, or closure back into 2038 would also not be very ideal on your 4 hour. But if it continues to hover here, high chance it's going to need to break the highs before coming down, right? And then if we look at this box here, so 2032 is the stops, right? So 2032, yeah, around here, probably on a smaller time frame we'll see that. But yeah, so in this box here, we also understood that we closed respecting 2048 here, came back down to these areas, and we tapped back into kind of 2031 point what is this point, well, essentially 0.0107, whatever, right? But in this case as well, the biggest difference here is the fact that you close respecting 2038 and not 2048, right? So you're definitely in a different part of the range now, and I'd say you're more mirroring potentially this traffic here instead. So if that's the case, right, and like look at this, right? This is also potentially something you're looking to mirror. You'll also come back up, right? Look at this. Your 4 hour had no top wick at this point. You came up to 2052 already. So previously, right, in this case, we came up to 2050. We didn't come up all the way up to 2052. So maybe that's what we need. Re-break the highs before you're able to make your way down, and at like the worst case scenario is it comes down all the way to around these areas. We have a stop just below, I think 2031.2, right? So if in that case it will need a break the highs here before making its way back down, right? So stops are in a good place, I would say. Your overall structure again is definitely on your side. It's just how long will you need to wait for this trade, because there's a high chance that price will come down towards 2038. And it's just a matter of, on the smaller time frame, do you have enough structure to come down, and do you have enough liquidity to come down? If not, high chance you'll be able to create a top wick for the previous 4 hour and then start coming down. But if you do have structure and you do have, if this is enough liquidity, then you'll see a push down first, right? Let's look at the hourly and kind of the smaller time frame structure. I don't really break down too much past like the 4 hour because there's just a lot of noise essentially. But if we just look at it in terms of the trade at the moment, your structures, you came up, right? You broke the highs, you started coming down, rejecting. I think the idea of the trade was, you were closing bullish to continue up, and then you had a nice bottom wick. So we got a potential wick entry on the hourly to start going up. Obviously, as volume died down for the session, we started pushing down first, re-breaking some of the lows, which is why there's a chance that you're going to continue going down, right? Just checking what your kind of hourly support is, probably around kind of 2042 sorts of areas, right? So high chance you're going to tap in 2042, which seems to be around this area, right? Look at all of this, look at all this structure here. Yeah, 2042 is definitely an area which I'm expecting price to tap, and you did, right? You tapped into 2043 sorts of areas. So if you started to reject, right? So your 4 hour range we just mentioned, between here to here, now you can shrink this down to here, right? So this is our 1 hour range. So what you're expecting is price to come up and down in this 1 hour range, and then potentially grab liquidity before going up. So in this case, you would need a break of the lows. You get that break of the lows, cool. Potentially price will start making its way back up now, but that's what I would need to see essentially. But yeah, even smaller time frames, let's have a look. I think where I got out was on the 15. As it was pushing up like this, I pushed up all the way up to here, and I think I think I took like I don't even remember because this was a while ago. But yeah, I think I got out somewhere around this area here. Yeah, cool. I think that's basically the analysis, guys. Just kind of recapping overall. Your high time frames are bullish, right? Your overall bullish structure is continuing. The only issue is you've now started closing respecting things, right? Your weekly potentially respecting, daily potentially respecting. Well, your daily is respecting, weekly hasn't closed yet, so I don't know. 4 hour has definitely respected, broken the highs to come down. So you're probably expecting a bit more of a consolidation in terms of cycles of the market. Consolidation, and then your next step is liquidity. So by that, what do I mean, right? I mean, you're probably not going to go anywhere for a while, and then you may see some more drawdown in terms of liquidity, and then a potential push back into your direction. So if those things all play out, then cool. Yeah, the trade should be all right. We could also potentially add pineapples when you're grabbing liquidity. If the right kind of scenario pops up, like for example, your 4 hour is still closing, respecting some of these ranges here, but you come down for that bottom wick before flipping, right? So we could get some wick entries, I don't know, around 2036 sorts of areas. So be on the lookout for that. And Don may be looking to do that as well. Um, so yeah. Thanks, good job. You just confirmed what I guess you saw on the 4 hour candle. Yeah. Cool. Let's see what the Zoom boys have to say. But yeah, I feel like it's been a while as well. Oh, so we just had market open as well. Jacob, Johnny, how are you guys doing? Ah, yes. Apologies. I need to unmute my entire system for Zoom. Give me a second. Hello, hello. Yes, I can hear you. I realize what the issue is with Zoom is when I'm working, I literally just switch Zoom, like the volume off on the um, kind of volume mixer. So
Yeah.
yeah.
I actually got trades this week
Ah, nice,
for the first time in 2 weeks.
nice. Was it a B?
No, one was 5 pips plus
Ooh.
yesterday, and today was B.
Ah, that's right.
But I mean, that one went 5 pips in profit, didn't it?
Yeah.
It filled the wick, so I moved.
Yeah.
I moved and I started to break even. So
Makes sense.
It sort of hovered at like 4 pips for about 3 minutes or something, and then just came back down.
Yeah, fair.
But I'll be honest, I don't understand this buy.
I would say when I initially entered the trade, I don't know where essentially. Are you in the trade? I don't think you're in the trade.
No,
Right?
no.
Yeah, well, I'm not in the trade anymore. But
If I see things he's taking that I don't get, I just don't take it.
yeah. I think it's the idea. I understand why we were potentially getting it if you were just looking at the hourly time frame. But
Yeah,
again,
the
this is also
you're
still
going to come up, but then the level's at 49.
yeah. For sure. Like I think on the 4 hour it just looks very disgusting, and I was worried that it was going to kind of mirror some of this to come up to 2050, which is exactly where we tapped. And then from there you could start coming down first. So yeah, it definitely wasn't like I think the cleanest setup in terms of all the time frames aligning, but your structure's with you. So it's just whether or not you get that re-break the highs. But yeah, I think I made a good decision to exit earlier on.
I mean, with the monthly close, you should definitely, not like the monthly and weekly closing, they should come up.
Yeah, exactly right. Because your monthly, your weekly is gonna need a top wick at any given point, right? You're gonna need a top wick because you've closed it like bullish for the month as well. So
yeah. And we closed above that.
look at that.
Someone referred to it as the Bermuda Triangle.
What the fuck?
the Bermuda Triangle for gold, like 2016 to 2038.
2016 to 2038. Like this?
It's been stuck for so long.
Oh yeah, I don't think we're moving. Like this has been a little bit disgusting, but yeah. Bro, serious question. Can you seriously make wealth and make a career out of trading? I've lost 30K last time. Don lost money. I'm getting tired of learning but losing. I would say if you're tired of kind of trading his strategy and losing with his strategy, you have to kind of go back. You have to kind of understand it at a deeper level. Like, what is the reason you're losing money? Because he's making money, for sure. If not, he wouldn't be in this game. right? He's definitely making money. How is he making money? Is that through risk management? Is that through something else, right? So what is the difference between how you're trading and how he is trading, right? You sit like you make your loss, whatever, like your 30K compared to like his 30K, or like potentially just whatever the lot size is irrelevant, right? If you just count pips, what you're clearly losing more pips than he is, right? So why is that? I think it if you just look at Don as an example or Wix as an example, it is definitely possible to make a career out of trading, and it's definitely something all of us here, all 31 of us on the kind of on the live here, we're all trying to make it happen, right? And essentially, we're all trying to learn as much as we can, so that in one day we can become that kind of level of and have that level of profitability. The only issue is then, how do we get there, and what kind of path do we take to get there? And I think this is where it needs a little bit more personalization, because even though we're learning that structure and we're learning that, breakdown for the candles and everything, doesn't mean we will see the way that the charts the exact same way that Don will, right? And only through experience and kind of learning do you understand the candles in your own way. And that's very crucial, because if we're just taking Don's setup day in, day out, right? Just as kind of Johnny was mentioning as well, like if we're just taking the setups blindly, we're not learning anything. If we take those setups and we're understanding, okay, this may not be the setup I'm looking for, and then you're taking it maybe based off of the fact that, this is, you've bought signals and you're trading that, cool, you're maybe learning a little bit. If you're taking that signal, you're not taking that signal based off of what you've seen in the market, then yeah, cool, you'll probably learn even more. So there's steps to this as well, right? The signals aren't something that you should probably blindly follow, unless it's just kind of a black box investment thing that you've decided on, in which case definitely a way to do it as well. But in general, I would say, yeah, like in terms of profitability, it's not like, I don't think it's the strategy's issue. Like the strategy definitely works in terms of the win rate being very high. So if you just moved your stops, a much shorter area, and you actually hit stops more often or whatever, there's a way you potentially could navigate that to make your win rate higher as well. And I think it's very much just shown by how Don's track record has been that over time this is a profitable strategy. But kind of going back on your point, like yeah, well, I think we're all tired of losing, right? Like, but the key thing here is analyzing why you're losing, what the difference is between our trading and his trading, and also once you get enough experience and once you kind of continue to look on be on the charts day in, day out, and see what price is actually doing, it's a high chance, right? You're going to gain more experience. You're going to be able to take your own sort of trades and analysis based off of what you see. At that point, you're going to be growing a lot quicker. So, yeah. Or you're leaving, yeah. Cheers for joining up this week. We'll see you. We'll see you on Sunday, man.
I just realised I had 3 trades this week.
Oh wow! Look at
Yeah,
you.
but one of them was I said in the chat, I got so excited that I was about to get something that I entered too early.
Yeah. That does happen.
I was like, oh my god,
Your
it's
first
actually
trade.
happening.
Yeah.
There's something I can take. Yeah. And then it never actually hit the area I was looking for.
Yeah, I think like thing is like this structure has been alright, because you've been consolidating, breaking out, coming up, right? Consolidating, breaking out, coming up, breakout, come up. Like structure's been good. It's just, I think the way, I don't think we've been able to create the exact setup.
There's not been nice bottom wicks when
Yeah,
it's coming up. Usually.
yeah. So entries wise, it's been a little bit sus, but yeah, the actual higher time frame structure has been good. So like if you traded the 4 hour, I think this what is it, since, well, 15th, so 2 weeks. If you trade the 4 hour, it could have been pretty clean to come up.
Yeah, there was a 15 that closed above 2041, which is like my 15 level.
Yeah.
Or 2041A. And then it literally closed like basically no top wick, and then the candle opened 25 pips up.
Was it this candle?
Yeah.
Yeah.
I was just like, dude.
That's what I mean, though. It's like this week has been full of just price having no bottom wicks like this, right? Like no bottom wick here, no bottom wick there, just from basically all the pushes we had, like these, like no bottom wicks, no bottom wicks, like yeah, unfortunate, I guess, but you know, yeah.
You
Oh,
know,
we have a bit of
it happens.
yeah, it does happen for sure. We have a bit of a discussion going. Can we have a set of buy stop at 2037? I mean, I wouldn't say the buy stops are currently valid, right? Because you're understanding that yeah, you can come down to 2037, but any given point, because you've broken these highs, right? Like here, um, you could continue to come down. So I wouldn't put a buy stop there. What I'd like to see is potentially this 4 hour close respecting. And if it does come down first, you can, in that case, and I think Don will probably also consider a pineapple. But you also need to see the smaller time frame structure. I wouldn't just blindly put um, a buy limit or something there now.
Yeah, if the 4 hour closed basically at the 38.8 level,
Yeah.
and then like with like basically no bottom wick, and then the next one came down first and broke that bottom wick, and then
Yeah.
flipped up, I'd
You'd probably
probably
be able
take
to.
that.
Yeah,
To be
exactly.
honest,
So it depends because if you're in that like so what you just described, Johnny, right? It's because you're not in a position at the moment, so you're not in any drawdown, whatever. So taking that flip is probably the higher probability trade, I would say. In terms of taking the wick entry there, I think it is very difficult, but it depends how far the wick has come down, right? If the wick is coming down all the way down to these areas, and it's like your previous structure, let's say if we drop down to like the 30 or whatever, right? If price does something like this, where I'm actually going to use this instead, price comes down slowly, right, like this, and then it just starts respecting, I'm going to need a pretty steep bottom wick and then the flip, and I'm not going to be looking for a wick entry because any given point the structure to come down, right, and that's difficult to trade. Whereas if it's just kind of come down really quickly and then started closing bullish respecting, and then your next candle, right, so what this looks like essentially is this: come down, right? And then you have bullish respecting here, right? And then next candle, break of the lows. And then you also have, like you're understanding that you're still bullish overall. Break the lows, no top wick on a higher time frame candle. High chance you're going to retest at least this high, right? At least this high. So in terms of that trading idea, it would be valid as well. So break the lows from here to here. And then after that, you could potentially, if you're in this position here or whatever, could potentially look to get break even somewhere around there. But yeah. But yeah, I think Johnny, you're definitely right. If you're looking for a trade, just the next trade, the flip is probably more guaranteed. 100%. Oh, we have a lot of people typing in the chat. What's up? What's up? Exactly. Create your own setup, but with the knowledge that we get from Don. That's what I'm currently working on. Yeah, it's a process. It's not like something you can do in a day. Like I thought initially when I came in, bro, I was like, yeah, like 1 month, right? And I should nail this trading shit because it was like, oh yeah, it's gonna be my birthday, and I was like, I should be profitable by my birthday. I'm gonna buy something pretty nice, and bro, it's just that was just way too rushed. And take your time because experience, you can't rush experience. Um, Robbie, I've noticed they have similarities, but you want to kind of study those markets too. Oh, so yeah, different types of uh, different pairs essentially also work with price action, but they have different nuances, I would say. So gold is extremely technical, and it's also influenced a lot by basically all major US news. So that's, the kind of, you can say, personality traits of gold. And it trades really well because we understand that, for example, we have this 4 hour closure respecting 48. In the past, we can see exactly where that has also happened, right? And it also will probably work on most major pairs with like a high amount of volume and people trading it. Um, but then if you move towards like, some very rogue stocks or whatever, then it may be the applicability of it is probably slightly different. Not saying that it definitely won't happen, but yeah. Since you see gold, you see dojis and liquidity grabs. Yeah, yeah. Yeah, like this price action and devious strategy will exist. Well, it's just we're going to continue adding to it. And no, I don't think any of these are stupid questions. These are pretty good questions, man. I think R1, R2 is still something we use. It's just so embedded into our minds at the moment, or embedded into his mind. I never really when I first came, I didn't even really look at R1, R2, but in his mind, well, Don's mind, R1, R2 is so, it's like a second nature to him. He just feels R1, R2, like, oh, it's breaking R2, and he gets like goosebumps or something. He just fucking takes a buy or whatever. Um, but yeah, in that case, it's, you know, he still sees the setup is still there, but yeah. Yeah, sorry, Rob, I'm just getting through these questions. Yeah, SCFX. Essentially, you know, that's kind of a good place to be, right? Like, if a lot of traders initially, right, and including myself, I would say we started trading. We had a different couple different strategies or whatever, and we just started losing money, right? We're just like, what is going on? Like, and then finding DVS at least gives us stability, I'd say. Like, you're able to rely on a strategy that you know definitely works. You're able to ask people questions on, you know, what the strategy is, why they're looking for certain things, and it's very transparent, right? It's like I've got nothing that I want to hide about the strategy. You can ask me anything about the strategy. Like, I do the breakdown every single day, right? And essentially, like, the strategy is something for you to stabilize your trading, right? And then after that, you know, once we get to that BE level and then potentially edging towards profitability, that's when we, you know, start to improve and break out of that cycle. You're super confused with when to use liquidity and when not to, and when to take wick entries with flip and breakout. Yeah, so all of that, I think I literally broke this down with Will, who's one of our newest members, essentially. So with with liquidity added on top of everything we're currently looking at, you have to identify initially what the cycles of the market are, and the cycles of the market are very important, right? So I'll try to draw exactly what I showed Will previously. And this is very applicable to most people's trading, I would say. I'm going to move this up to here, actually. So I'm just going to draw some typical price action, right? But this will be very useful for you, Robbie. This is literally what I drew for Will earlier today at like 6 p.m. or something. So here we can identify that price has kind of three areas, I would say. Three main areas that it's cycles, I would say, that it's currently doing. So here you have your push, I would say. Right, so this is when price has its direction and it's just driving, right? You still have structure, you still have highs and lows, but you're driving and you have a solid direction. At some point, price is going to stop, right? It's going to stop and consolidate. So that's our kind of second area here. And then as you continue, right, what you'll see is price grabbing liquidity for you to continue going up. And then after this happens, guess what? You then have more direction for price after it kind of settles down a little bit more with the volume. And then you have a restart of the initial push sort of area as well, right? So that's kind of what I'm looking at in terms of market cycle. And that's how you should be looking at price action as well. So within each of these cycles, you'll have different setups that will work in different ways. For example, right, you just mentioned, when do you use liquidity and when not to, right? When are you taking wick entries? When are you taking breakouts and flips? In this cycle of the market, right, initially here, I would say that if you wanted to use a breakout here, it probably has a pretty high win rate, right? Because you've found direction. So you understand that if price wants to continue pushing in that direction, high chance it will. Because you have the direction, you're pushing in that direction, and it's a high chance that you're going to continue in that direction for the near future, right? Because there are no signs that price is rejecting at any given point. So I'd say your breakout and your flips and everything here, fantastic to use. When you look at this section, right, you're asking yourself, okay, price is now consolidating. We've respected some area, we're struggling to break out, right? So if you take a breakout here, what's your win rate? It's probably a lot lower, right? You have to ask yourself, why are you taking those trades? And like, what are you identifying that potentially is different to the markets? So one thing we mentioned, what I mentioned to Will is, for example, you get some smaller time frame breakouts. So let's say this area here, say this is your smaller time frame, right? And we're going to draw that out. Potentially in this range as you're coming up, right? Doing something like, oops. I think Will wanted to clip this as well, so it's good. But essentially, right, let's say you're closing respecting, you're just going up and down. No real direction, right? Just market consolidating, not doing much, right? And then doing something like this. What you could get is price coming up first, doing this. Oh, it's like, oh, cool. I want to take a breakout, bro. Yeah, and then you kind of you're looking for the breakout, and at any given point, price could do this. But it could also still not be going anywhere. It still could come back into the range and do nothing. And why is that? Right, you're understanding that this essentially here is just price consolidating. Oh, Calm is here. Sup, Calm? But yeah, so this is price consolidating, and on your smaller time frame, it may look a little bit messy. You may see like breakouts coming up and down and all of that, right? But it doesn't show you any direction. And I would say if we now draw what the higher time frame looks like on this side, what you'll likely see is actually just this price coming up, and all of this here is potentially just one candle that looks like this. So in that case, you're on you like this is your 1 hour or this is your 4 hour. Has price gone anywhere? Right? It hasn't, and you've just been stuck in a breakout above here, right? Because you're understanding that okay, yeah, I'm looking for breakouts, but what is the cycle of the market? If you're stuck in this cycle and you're taking these breakouts, the win rate is definitely going to be lower, right? Because you don't have the direction. Any given point, you're looking for price to start pushing again, right? And so now you're asking yourself, when do we get into this sort of this kind of push scenario where you just start driving, right? And I would say when you drive, you need to grab liquidity, because if you don't have liquidity, you're not really driving. You don't really have momentum in the markets, right? Obviously, if you have volume and like news and stuff like that, you can drive just off of this point, like off of this. If this is news, you can start driving up 100%. But that's not our setups. That's not our entries. And we can't really do anything if that happens, right? So what we're looking for is price to potentially grab liquidity before going up, right? So I've drawn this in a very specific way. In this case, right, you have a break of the highs first and then a break of the lows before going up. So why have I drawn this? Because a lot of times what you'll see is this, right? You'll see an actual breakout on a 4-hour candle or whatever to go in the direction that you're going. And a lot of people will be like, oh, wow, that's fantastic. That's exactly what I'm looking for. Because on the higher time frame, in this case, right, what you would see is this. You finally get that higher time frame breakout and you're like, wow, this is exactly what I've been waiting for, right? Breakouts, higher time frame is showing me structure, I'm going up. But at this point, you're understanding that, okay, if price has been struggling here for the past, I don't know, duration that you had here as well, right? Any given point, price is not going to continue driving up like this. There's a high chance that what will happen is you'll need a bottom wick tapping into break of lows, which is why we always look for break of lows, tapping into support, tapping into liquidity before you're able to make that drive, right? So in that case, what we look for is a break of the highs in order for you to break the lows. Because if you don't have this break of the highs, right, there's a high chance that you won't even get down to these liquidity points. Right, and in that case, you probably won't have the higher time frame liquidity that you're looking for. There are cases where you potentially get this, where you consolidate and then do this. This works as well, right? But high chance what you'll see is a similar area here. We have a 5-minute or like a 15-minute break of structure to go up, and then a closure back into the range, fake out to grab liquidity. Right, and if that's the case, then cool. Then it's literally just this, and this is a smaller time frame fake out for you to come back in. And once you do grab this liquidity here, what is the most guaranteed trade? Right, you have to ask yourself. Once you're in this area and you're grabbing liquidity, this at any given point could either be a liquidity grab or it could be a change of structure, because you're now breaking the lows after breaking the highs. So if you did want to start coming down at this point, feel free to come down and we'll look to take them themselves, right? As you continue to break that structure, because after this, you're expecting volume, right? So every single time, I think on most trades that we take with Don, once we break out of a range, one thing that is guaranteed is volume. Direction, not so much, because, Price could be doing this. Price could be doing this. And there's no direction yet, right? But there is volume. So once you get that volume and then, right, you're looking for direction. And what is the direction in this case? A re-break of the highs would be pretty strong direction, or a re-break of this low would be direction as well. All right. And then once you do that, high chance you'll go back into this phase for your push. All right. So in this case for buys, let's draw out the smaller time frame. Let's draw out the higher time frame as well. All right. So in this case, on the smaller time frame, what you may see is price coming down, grabbing liquidity, these areas, right? After this fake out, right? Coming back down, grabbing liquidity. Oops, actually, I'm going to draw it in a different way. Grabbing liquidity, breaking back in after a nice steep bottom wick, and then a re-break of this high. And as you re-break this high, cool. High chance you're going to look to continue going up, right? And you see this high and this high. Let's draw the higher time frame now, right? Any given point, price could just be coming down, right? Well, I'm going to start with a red candle so you guys can see it more clearly, right? But from this point, you've come down first. You have no top wick, right? No top wick, break of the lows, high chance, right? This higher time frame candle, say it's a 4 hour, say it's a daily, it's going to flip. You're still in the range. You're still respecting this overall range here, right? Any given point, if you flip, you could have some clean traffic up to your next support, and then you can potentially hold, right? But as the candle is currently look like this, you understand that there's a chance that price was going to flip and continue going up, right? So in this case, what we'd be potentially looking for is a break of the lows and a flip to continue going up, right? And in both scenarios, essentially, what you've got is a break of the lows, right? And then a re-break of the highs. So kind of going into GW's question now, where would you take your entries, right? So we've understood that now we've grabbed liquidity. So this is liquidity. If we wanted to look for sells, what could we do, right? What you would see is probably a closure on this candle below the range. And you would potentially want to see something that looks like this, a re-break of the lows, right? But also, you're potentially coming up. You're also creating some structure, right? Some top wicks. And at this point, what I would potentially look for is then a re-break of this low after liquidity has been grabbed. There's multiple scenarios here, and one of which is also if you did close like this, having that top wick that breaks this high, right? And then re-breaking this low, or potentially even taking this off the rip because you're not expecting too much liquidity. Taking this one here or here would work as well because you've rebroken this high here, right? But those are the sell scenarios. So the re-break of this low or re-break of where the liquidity low is, all right? Oh no, I didn't want to do that. Come back, please. Yeah. Right, but in the case for buys, right, you're understanding that, cool, price is making its way down at the moment, right? So it was coming down, 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 and then it flipped, right? So what you could be looking for is a flip, because during that flip, right, you're understanding that, cool, you on the lower time frames, this is happening. You're getting a fake out, back into this range, right? And this range essentially is something that has been, shown before, that every time you close above, you're looking to come back in. And because your previous candles, right, may have been respecting this overall resistance here, high chances once you get that closure, bottom wick, you could look for the range between here and here. That would be quite nice, right? And then in that case, you can also be potentially holding for runners, right? But I wouldn't be looking for the bottom wick at this stage unless I get some nice confirmations ahead of time here, okay? And then once you re-break this high, then cool, you're in this cycle. So the buy here would be around here, right? To continue going up, and your stop loss would be below the liquidity lows or below this low, right? So that's what we're looking for. So yeah, so hopefully that makes sense. Any questions from the Zoom boys as well? I guess you guys already you all know this anyways. Yeah, it's just what we talk about day in, day out, basically. Yeah. Yeah, hopefully that helps.
It's good to recap occasionally, though.
Yeah, for sure. And I think like a lot of the times, like I think you're really good at this, Johnny. But a lot of the times people focus on the smaller time frames, so they'll like see this and be like, oh wow, yeah, it's coming down, so maybe even here I can look to take this fake out to come back down to fill the bottom range. You can, right? There's a lot of different setups you may see in between here, but there's also a smaller probability, a smaller win rate, right? There's a lower win rate for that.
Well, all those are what I used to take.
Exactly, right? So you used to take them, and it's like, the wins and losses, they come more frequently, but, you know, at the end of the day, you just want that higher win rate and the higher setup probability chance.
Yeah, I've been trying to do like smaller stops with the higher win rate.
Yeah.
Because it's like the only way to make the funded work. Which has been interesting.
Yeah.
I don't think I've got it down yet, but maybe soon.
Yeah, maybe soon. Basically, re-break the highs and lows, then the opposite direction. Yeah, basically, right? Because if you're gonna come up, you re-break this high, right, and then you start coming back down, indicating that you need to grab liquidity. So you break the lows. If you break the lows and you're not continuing down, then cool. Then there's a high chance that if you do re-break this high, you're going to continue going up, and this is your liquidity grab. And you also have to understand that if the higher time frame is respecting a level, yeah, cool. That could be, indication for us that it wants to continue in that direction. But if you do come back up to these areas and then you start re-breaking the lows, again, also you could be looking for sells as well. So buys and sells are both valid. How about the wick entry? So I wouldn't say in this case you can get a wick entry. So it depends on your lower time frame, and it depends what you're seeing. So what I mean by that is, in this case, right, looking for this wick entry is difficult because your previous candle closed bearish. In the case, right, that you did this instead, came down, right, you tapped in that top of the range, fake out, and then you closed bullish again like this. In the case that this happened, right, and then you came down first, cool. I could potentially be looking for some wicks. Why? Because at this point, right, you've established a support. You've established support here based off of just these two candles. And you have no top wick for this higher time frame candle, indicating that if you are respecting your previous candle and you broke the lows, high chance you're going to fill this range to this range. And all you need is liquidity, right? And also because you didn't have a true break of the highs before coming down, high chance you're going to come up to around this area first before retesting those lows. So what that kind of opposite candle would look like is, it would need to look like from here to come down, it would need to do something like this as well. If not, something that comes all the way up to these areas. So in this case, you're put in a situation where taking a wick entry here, you may not hold past this flip, right? But you could take from here to here. The reason you potentially may not hold past the flip, right, is because any given point, this is also resistance, right? This one candle here, this also has structure, right? You've come up and you've done something like this. You opened here, came down, came up, and now you're respecting, right? So there is some level that you're respecting here, which is why you're closing potentially here as well. Or at least definitely going break even or whatever, right? And also, if this does want to start coming down, you could just create a very small bottom wick, top wick, and then start coming down. My problem is, how can I say that is the right wick entry? So that depends a lot on where. Okay, so that kind of goes quite nicely into the next phase of kind of the discussion. So essentially, you have to look left to see what's kind of happening, right? If we look at this push that happened here, why did this push happen, right? So I literally just drew up this area for the kind of breakdown earlier today. We weren't able to look for wick entry here. Why? Because we didn't get a previous breakout above. If you have some confirmations, then you could be looking for some breakouts and then wick entries. But with the wick entry, you do need more confirmations that price is definitely going in that direction. And then, yeah, cool. We can look to jump on the board, jump on the train a little bit earlier on, right? And in that case, high chance we were able to take something until like the flip or something, right? But the right wick entry is just trying to scan left to see what price did in those similar areas previously. So, you know, with the breakdown that I did just now, right, on this 4 hour, we're understanding we're in this range. So what was the last time we were in this range before we're able to continue going up, right? So in this case, I'm looking left here. Oh, cool. Like there's a chance that price is going to be doing or respecting some similar levels to here. And where's the liquidity being grabbed? Potentially down here at 2035 and another potential down here at 2024, right? Next time is this, right? The next other time that we were kind of in this range is here. Came down, grabbed liquidity once at 2035 and then again at 2031. So just based off those two areas, I have some idea that there's potentially some, you know, liquidity points being grabbed at around this 2036, 2035 sorts of area. So that could be where I'm looking for bottom wicks. But I'll still need to see candles closing respecting 2038. Right, and in that case, I could be looking for some wick entries. Ideally, if you can close respecting 2043 even, right, like a bullish candle like that, and then bottom wicks down to that kind of level, and then a reflip, or like looking for a wick entry to kind of flip up. So that would work as well. But when it comes to which exact liquidity point to use, it's more complex and you'll need to look at all the different time frames to align. Like what I would do is I would look here at like these specific areas here, right? And I would jump down to the smaller time frames to see exactly what happened there. Was there a structure being created there? Were you respecting certain levels and then just coming down with no top wick and then you're expecting to flip anyways, right? But all of those things kind of contribute towards if you're able to take the wick entry and what is the right wick entry. Like previously, I think for one of Don's trade, I don't know where it was specifically, but I think it was around here. So let's just go here. So we're expecting after this fake out price to just drive up to fill the range, right? Towards around 2038. High chances it's going to happen because on your higher time frame, right, you got a fake out, right? Break out of the range, closure back into the range potentially. So cool. How do we get on, how do we jump onto this opportunity, right? Looking left, what was the last time you closed above this area here? Right, because you closed above 2035. Here you had some resistance here. You closed above, but you had no top wick. You didn't drive, right? But you still tapped into 2037. In this case, you also started coming up. You drove. This case, you drove straight through. So this is a level we're definitely looking to tap into 2037, which is your break even, and then potentially fill up to 2038. All right, and just looking left, right, very very early, like recent left as well. Where did price tap into before going up, right? And you're just looking here. This is what I mean by smaller time frame, because your high time frame is already aligning. So this area here, your 4 hours making sense, right? Understanding that this fill of the range is very likely. Hourly is also looking clean after this fake out to continue back up. Everything's looking clean. It's just how do you get that entry? And in this case, the wick entry made sense because your direction is already there, right? And when we were drawing this diagram previously, where is it? Oh no, I don't know where the diagram is anymore. Did I get rid of it? Perhaps oh yeah, because I'm in replay tool at the moment. But essentially, we're looking for entries, and what would be a better entry than just the flip, and what would give us a better advantage point, right? Because if we take this wick entry, we can look to manage risk at these areas, or potentially at the rebreak of the highs, or at this flip, which is around 10 pips, 12 pips, right? So in this case, what we're looking for is a wick down towards around 2034, or exactly where it was around 2034.7, right? So in that case, we just drop down to the 5, whatever. We're looking for those wick entries. Cool. You have this 30 closure above, your hourly closed above. You're waiting for all those things to happen as well. Next candle comes down, taps this bottom of the range, fills. Yeah. So that's kind of what we look for in terms of, the right wick entry. It depends on the context a lot. That's the main thing. Hopefully that makes sense. Babido Life. Elvis Min. So when a trader gets a skill level like you, Don, absolutely, then their career can be made out of it. It's just my mates, even broker seminar stage charts don't work forever. I would say you definitely still need to adapt. Like we're still trying to improve, right, our strategy and all of that. But at the same time, like if we can do it, why can't you do it? if I like that was the question I asked myself, like with kind of looking at Don's analysis. Well, if Don can do this analysis, what's to say that I can't do this analysis? What's to say that my analysis won't be better than Don's? Because I'm not trying to be Don. I want to be better than him, right? I want to be able to teach him something in the future. Um, but yeah. Need constant fundamentals and no order flows are so negative towards price. Yeah, like obviously, actually, I would say that most people lose money on the charts not because of their strategy, but more because their managing of risk and how their relationship with money is. Because most people who come to trading, they're here for money and they're staying, or they're potentially not staying because they've lost money, right? So that's their kind of win condition and lose condition. But for us now, we're understanding that this is just a long term game we're playing. It's something that we want to do for a longer period of time because there's a high chance that if we are able to develop this skill and kind of detach ourselves from, just thinking about money all the time, this could work because our analysis is playing out, right? So if your analysis is strong, your strategy is strong, then it's just a matter of psychology, right? Do big traders like millionaire traders or hedge funds use price action also? Sorry if you're. I would say no. Like these are good questions as well. I would say millionaires or whatever. There's a lot of different ways they potentially would approach the market. Like I can only say this in the point of view if I was a millionaire, what would I do? Either you would just trust some of these signals because you're making money outside of trading already, right? Um, or you already have a lot of money and you don't really want to spend all this time doing your own trading, so you treat trading as like a black box investment sort of thing. Say you buy John signals and then you just do that, right? And you don't really look at the charts as much, so you don't really rely on price action. Another way you could view it is they've come up from zero to become a millionaire through trading, and in that case, right, I would say yeah, they're probably continuing to use their strategy, and if their strategy is like order flows, order blocks, whatever it is, or price action, they'll continue to use it because it's been working for them, right? And then maybe you'll get to the point where you're selling courses, you're selling signals, and all of those things. But yeah, I would say, it just depends. Like price action is just one of the strategies. A lot of people use like EMAs, like indicators of sorts, right? But for us, what made the most sense is just to look at the raw candles and understanding exactly what price is doing without any sort of interference from other sources. And being able to read price just as price is I think a very fundamental skill set to have for trading as well. Hopefully that helps. But cool. Yeah, guys, I think pretty good explanation for today's sort of breakdown here as well. Like all of this stuff that we mentioned, very, I would say, very good to know. Can I bring this back? Oh, I can. Look at that. Yeah. So this is essentially what you're looking at. If anything, if you didn't really get too much out of this session, I would say this is probably the most value. Um, just to recap or whatever. When you get the confidence to be able to do that, I would say it's not even related to like lot sizes and stuff. Um, the feeling you get is essentially, yeah, like it's not like it's not like, oh yeah, cool, I'm definitely profitable now, or like, oh yeah, like this, I definitely have this confidence in this setup now, or whatever. It's more just when you see your setups and your kind of strategy and your ideas play out a lot more often, and that could be through your own trading ideas, taking 0.01 lots and whatever. Once you see that happen a lot more, you'll be like, okay, cool, yeah, I've taken this many times before. I know exactly what's happening, right, or what the higher probability chance is for this trade. And cool, like at that point, maybe you've found something that is a high win rate, and that's kind of what Don's approach was, right? Like with the breakouts, with the liquidity grab stuff, all of it is because he's done a lot of testing, right? And he's seen it in the charts before enough that he's able to take the setups and win from the setups, right? And yeah, journaling is definitely also very key. Very, very key. But yeah, cool. I'm probably gonna end it around here, guys. Anything from the Zooms, or I guess just from Johnny today, but
Yeah, I mean, Jacob said he was making lunch, but
man's been making lunch for an hour. I don't know. How do you make lunch for an hour and still not be here, bro? Anyways, all good. Yeah, we'll see you, I guess, on Sunday then.
Yeah.
But yeah, sounds good. Sounds good.
Right, well,
Yeah, yeah,
enjoy the week.
yeah. You two have a good weekend, man. Yeah, we'll speak soon. Speak soon.
Right, see you.
See ya, see ya, see ya. Oh yeah, because now I've ended the Zooms. The charts are gone. So if you wanted to clip it or whatever, your opportunity is probably just to go back into the VOD and get it from there. Yeah, I think rewatching it is good as well, but just trying to get the concepts into your mind to understand, like, what is like, why am I looking for this, right? In relation to market cycles versus the setups and entries. I think that's what you need to get into your mind. Like, why am I looking for it? And the main reason is because I want to take a breakout when a breakout is meant to be taken. I don't want to take a breakout when I'm gonna get there's a low win rate for that. And so identifying when to use the breakout, when to use the different setups is very key. Yeah, but I mean, if you have any questions at any given point, just try to ping me wherever. Um, and if you want kind of like one-to-one sessions or whatever, like I did for Will this kind of afternoon, you can just join the membership. That Nightbot has very conveniently pasted right there. But yeah, guys, I'm probably gonna end it around here. It's been a fantastic session. We covered some pretty valuable things. Thank you to Robbie and to everybody who's been asking questions as well, SCFX as well. So yeah, feel free to come back on Sunday and for whenever we have these streams to ask more questions like that. So yeah, so if I don't speak to, well, I won't speak to you guys before the weekend anyways, but have a good weekend, and we'll be back on Sunday for this for another analysis, and that'll be our first analysis for March. So yeah, speak to you guys soon, and peace out. Peace, peace, peace.